Hello, everybody, and welcome to the Plus Three Futures and Commodities show. We are recording at about 2:30 Eastern Time on Friday, January 5th. It's our first show of 2024, and that means we've got just about a full week of trading in the books. Can you believe that, Barry?
Well, I'm going to have to believe it. It's happening. It's happening.
Again, for those of you new to the show, my name is Ben Maldonado. That's my partner, Barry Hederachi. And yes, Barry, we are basically an hour and a half away from completing the first week of 2024 trading. And what a week. I mean, and the beautiful thing is the chart you're looking at, the E-mini, shows what can happen when you have a 90 by 45 and why. Barry has repeatedly said it, and I repeatedly said it. Even when I was taking the week off, I said I had to look at when you have, a 90 by 45 on the daily. And this is the reason why.
Yeah.
It's not that, and again, it's not that we have a crystal ball. It's not that, we're making wild predictions. It's that, probabilities when you see these numbers come up and this geometry appear, the odds favor that something could happen. And, as we're going to get into in this show, something did happen and is happening. So it's a great example, real time. Go back and check last week's show and you can see exactly what we're talking about. In addition, the shows a week before that and the week before that, we started highlighting that, hey, a 90 was here, a 45 in time is coming up. We got to pay attention to those sort of things. And this is the reason why. On today's show, Barry's going to cover the big five, which is ES, bonds. Both of those had a lot of movement this week. Crude, gold, dollar, the euro, and copper. And on today's show, I'm going to make brief comments on the 30-year bonds, wheat, cocoa, crude, and nat gas. So we got a lot to cover, and let's not delay anymore. Let's get into the E-mini S&P futures and dissect this bad boy.
We had the price and time square out. We were looking for some kind of a correction and we got it. And funny enough, it stopped exactly at the zone that we have marked as resistance on the way up.
Mm-hmm.
And that just happens to be, this is square of 90. And I think right at the low here, we have 72 degrees.
72, yeah.
Right? And this is 45. So we had a few days down. So what now? What now is we're going to look to see what the counter trend is. And why are we talking about counter trends? Well, first of all, we came down to the 72 line. And if I could just quickly jump to the 30-minute, this 47.11 level we've been watching for a while.
Mm-hmm.
And we came down to it. And this is kind of low we want to see. And it looks, this is what happens when you get a false break. I mean, here's the first low, false break, and then we get this fast move coming out of there. And of course, that's stopped perfectly on this downtrend line. And the lower part, which made the triangle, and this is really exactly to the hit to the apex, not just in price, but also in time, right?
Very nice.
You guys are following us on Twitter. You probably saw that because I post this every morning, a 30-minute chart. And just to sort of recap what happened this week to help us follow along. We're really looking at the 48.18. You guys probably heard it forever because, ever since we got up to about middle of December, we've been talking about 48.18.
Right.
And once we got there, we had resistance up above. It was right under 48.50. And if you're watching this every week, you probably followed through. And the idea here was that we had to hold above 48.18 in order to continue higher, but we couldn't. We broke down here and lower high, couldn't hold it, and then we faded from there. And our second level of support was 47.90 area, and you can see what happened there. We came down, and now once we got down, so here's what we talk about. I mean, here's a quick lesson. When we say, break down and hold below, get below,
get
and
stuck under,
below.
yeah.
Stuck under is this, we got under here. We tried to get above, couldn't do it. Got above, really couldn't close, have a bar above it. Came back down, tried again, couldn't do it. Tried again. Look at that. That's not all over the place. It's exactly on the line, right? I mean, it's right there.
Right. Really good.
And you can see the highs kept going lower.
Mm-hmm.
High, lower high, and then slip. And so once we broke that, the next level we were watching was 47.44, came down here, tapped around for a whole day. And of course, we break down at night, did all this shuffling stuff when nobody's looking.
Right.
And pretty much, here's the pattern, right? We came down to support 47.11, did the false break and ran up right up into here. And the idea being, if we're going to go back up, we really need to get a close above 40, not a close, we need to hold above 47.40
Right.
and 47.44. And we haven't done it yet. And you can see the last half hour bar, right, went right up into that. And, there was still selling going on. But in the meantime, what I'm seeing is this is pretty good support. And we know the 72 degrees is down here somewhere. So, it's a decent support area, support level. And if we can hold above 47.44, then we can expect a, maybe 1 or 2 day counter trend. And if it's not that weak, maybe a 3-day counter trend going up to test these highs.
Barry,
that's really the test is that. Test
Yeah.
is not like, the high came in and we got to move. Okay, great. So I feel like that, really kind of finished here to some degree. Now we want to see. Now, if we can't get above and hold above this 47.44, it just means we're not done. We're probably going to get down to this 46.30 level, or we can get down to 46.75 level. There are other levels to get to, but they're all pretty far apart. So it's good trading. And well, just like you were thinking there, Ben, it's all about the counter trends, right? So if we can't really close above that, I would expect further weakness, maybe Sunday night, Monday. But, if you can somehow, get up and hold up above there, then we can probably have a little bit of a counter trend next week. So what do we do then? Well, what we're going to look for is to see where it's going to get stall out. 47.90 is one potential, but 48.18 is really the number.
Right. Barry, put your cursor on that rebound high off the low, that high on the 30-minute. Put it up, move it up higher so we get the flat line at the top.
Right there.
Now look, I was pointing this out on Twitter. Look all the way left. Remember the stuff we were doing in mid-December where we were in that chop zone?
Yeah.
The highs basically are on the bottom of that chop zone.
Oh, so right. Yeah, all that overhead up here.
Yeah, if we can't push above that in the next day or two, it's really bad. Yeah, I think.
Yeah, this level here.
Exactly.
Definitely, everything above that.
Yep.
Basically, that's what it looks like. This box, right?
That box, that's right.
So yeah, all of that is there. This is here. I mean, then we got that. Clearly, we need to get above that. And but so the great thing with this type of analysis is we know where to look. I mean, these levels we can get from the chart, but we have the squares, we have the levels from off the squares, and it really helps sort of frame the price levels. Even here, we knew that level was there. We knew the 47.44 was there. So at least it lets us loosely sort of bracket everything. All right, let's back to the daily. Daily, you only had a few days down, so the whole week down.
Right.
Not much to say because we did come into support. So now we're just looking for the counter trend to go up, and we'll see how strong the counter trend is. And now you guys know which couple of price levels to watch for. And all of these price levels are in the spreadsheet. The spreadsheet is in the description. And even the things we don't cover, like silver, for example, in all the things that Ben covers there, all the levels are there, even though we might not cover it, but the levels are there, right, Ben?
The levels.
I know you update it every day.
I put it in every week, and I'll when I post the link to the video, I post the link to the spreadsheet so you can find it there too.
Right, great. All right, let's go on to the weekly, see what's happening at the weekly level.
Ooh, that's a big one.
Yeah, it's a big one, and it's very cool. This 81 thing is just playing out.
It's really nicely
in spades. And what we do have here is a false break.
Yes, we do.
And how do we know a false break? Well, it's followed by a fast move.
Yep.
And if you look at this
week is a fast move.
It's a fast move down. It was pretty swift. But what we do have in place is a false break. We broke up. It didn't continue. That's a false break. And not only that, it happened exactly where we were looking. Yeah, it's a couple of bars off. We were looking at the
Timing wise, yeah.
Timing wise, it would, I mean, it would have been beautiful. It was on the week of the 15th.
Right.
But, you know how the markets are, pushed through a couple of days, 2 days, okay, because it still held the price correctly. And
it's another good example of getting stuck under. Look at this week's bar.
totally. Yeah, that's definitely stuck under.
Yeah.
And this 4x1, we broke that.
Yeah.
So that's kind of new. So, we're basically breaking, this is sort of the first break. I feel like we can bounce around a little bit because we do have good support around 46.50. You can look at, I mean, you don't have to go far to find that.
Yeah.
And it just happens to be 7/8 of the square, which is a very powerful level.
Mm-hmm.
So I would expect the correction to, at least get into the 46.50 level, maybe a little below, just to cover that gap there. Not that gap, actually. There's a gap in the S&P, the cash market. So,
Yep.
All right, that's it for the weekly. Let's get back. Anything you want to add on the S&P much, or?
No, I think your
Good?
analysis is pretty good. I think we're in the zone where the fast move might be over, and maybe we were chopping around sort of sloppy wave 4 type action before the next move.
Yeah, the initial one, what's potential here is this could be a 1, 2, and the 3 could be the real fast move, right?
Right.
You got the fast move off the false break.
Yep.
Now let's see what happens here. Like Ben was saying, it could be a second.
Yep.
And the second could be a quick one, or it could be a sloppy one. So we'll have to see how that develops, right?
Absolutely, because and the nature of this counter trend is going to tell us a lot. If we don't bounce much, it's really weak, and it'll show its hand that
and that's going to give us a fast move.
We may get that fast third,
area, right?
Yep, that's right. That's right.
And the market's still very strong. If you compare it to the 1x1, look at the space between the 1x1 and where the lows are. So there's plenty of room for volatility and movement.
Right.
I wouldn't. So it's a good time to trade, basically. It's what it is.
Yeah, we're getting some trends, which is nice.
Mm-hmm. And yeah, and all that stuckness we had over here, and we all fell asleep. But look at that. What happened soon as we got out of that, right? Boom, 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 boom. It's like very quick moves. So these times, we joke about like, oh, it's time to rest. Yeah, it's good because then it becomes really active. So you have to be ready for that. I just want to call that out while we're in the middle of it and it's fresh, because we talk about it all the time.
Absolutely.
All right, moving on to the bonds. What's happening was last week, if you guys didn't catch the last 2 shows, I would say to go and check them out, because we kind of covered how we built up to this place where we are now. And because it's a nice story, how we kind of came up into this. So you can check those out. So that's how we got the 72. So if you watch the last couple, then you know how this came about. Anyway, we talked about how the bonds respond well to the square of 72, and here we are,
It's a beautiful move.
Beautiful move right up to the 72, very well measured. And of course, now we're above this sort of a support resistance area. Mm-hmm. And my take now is, long as we're above this 119.5, I would say we want to wait to see what the counter trend looks like. I think the counter trend is worth taking a shot at, and maybe get light as we come into the support level. And then if it goes, then we go, we have to go with it. Mm-hmm. But it's the same story. Anytime we make a major run and we turn on cycle highs, you want to try to capture that next leg. And that's why we're watching the counter trend, the bonds too. And if we stall anywhere 124 or less, 124 would be ideal. Somewhere between here would be just perfect, Well, you guys know how to trade those things, but basically we're looking to the downside until this high gets taken out.
Yeah. And the remarkable thing, everyone tries to talk about fancy correlations and everything. Just look at a bond chart, look at equities. Yeah. Look at bonds, look at the S&P. Mm-hmm. They're moving in lockstep right now.
Yep. And you're going to look at the Nasdaq, right, today?
Yeah, we'll look at we will look at the NQs today. Mm-hmm. Yep.
All right, let's take a look at the weekly bonds. Sometimes you don't have a lot to say because the market's just doing what you sort of called out, expected.
There's that killer box, man.
I was wondering how far we're going to crawl up that thing before we.
Yeah.
So kind of sellers kind of stepped in.
It stopped it.
But isn't it cool to see that? We kind of tried to get in there by 1/3 of the way and just stalled out. And all of a sudden, selling comes in today. Look at that. Took out 2 prior lows.
It's a beautiful outside reversal too.
Yeah, yeah. And well, it's a reversal and took out 2 days, 2 prior days, right?
2 weeks. Yeah. 2 weeks worth of it.
Yeah, 2 weeks. That's right.
Yeah. Yeah.
So
2
it's a
weeks.
big deal. It's a big deal.
Yeah.
And that's why I'm confidently saying, oh yeah, we're going to catch the counter trend because
I agree. The bonds look weak.
yeah, bonds look weak. And, it just, everything's lined up to point that to be the high. And I
Mhm.
think price stopping right at the top of the square helped us out.
A lot.
A lot.
Yep.
Yeah. Let's move on to crude.
Crude's interesting here, isn't it?
Crude's perfect, and I'll boldly call out the rest of it.
Right, right.
And the only reason I'm doing that is we did
We squared out.
like we always say, what are we going to look for? We're going to look for that first pullback, and
We got it.
we got that, and it was a higher low, looking good.
Yep.
And the other fact is, we didn't. I mean, really, just as important is the fact that we didn't quite get to the 64, 65 level.
Yep.
Which means there's some strength, right? And the higher low shows that, and we're more or less above price, at least is above 43.70, but I'd like to get above that. I would say as soon as we know we're above 43.50,
73.
I mean 73.50, we're
Right.
pretty well
On the way.
Yeah, on the way to check 83.
Agreed.
And so that's the deal. It looks good. We broke the downtrend right there. Right.
It's a good spot to play some options on crude.
Yeah. We can, I think long as we get above this 73.50, we can trade
Yep.
to the long side.
Yep.
We got trade everything to the long side.
Yep. Yep.
And looking at the weekly. So what do we have here? We're at the 50% level and just about ready to kind of peak above.
Mhm.
And there was buyers sitting down here, didn't get down to the 3/8, which
Nope.
is roughly 68, didn't even get down there. And buyers bought it up towards the end of the week. I feel like the low is in for that counter trend. So
Mhm.
so how do I call that out? We had a high, low, first up. Here's your pullback.
One pullback. Yep.
So there's 1, 2,
It's possible that 3's coming.
3. Yeah. So that would be 3. And, with all the things on the table, I mean, we could have a hell of a 3. You just don't know which way
Right.
it's going to
Right.
play out, but what's going to trigger it. But, it's definitely poised, I would say.
Yeah.
So if we can somehow get about this 50% of the square, which is 73.5, let's say, I think, we can start trading crude again.
I mean, earlier this week, you and I were talking about the daily did an outside reversal down. And I was like, man, that's a bearish bar.
Mhm.
And then you said it is a bearish bar, but this might be a shakeout. And it looks like, based on the fact that there has been no follow through since that bar, that it was a shakeout.
Yep, sure was. And so after a shakeout, you want to see some strength going the other way, and we did. We kept
We're seeing
making
new
highs since that bar.
Yeah.
So they're pushing, and so that's it for crude. It's fairly straightforward. A lot of these markets are pretty straightforward because they're hitting the corners just right.
Yeah. Gold is not one of them right now.
Gold is never one of them.
All right.
Gold and silver and soybeans. Good luck.
Right. Yeah.
And sometimes coffee. So here, I'm going to drop a 1x2 in here. I'm going to leave the 1x1 just for reference so we can kind of see the momentum, how the momentum is building up in gold. And here, through all that, whatever noise we heard, I mean, it's holding above 2,000.
We still have the higher low and we're above 2,000.
I mean, just imagine like gold above 2,000, like if you traded 20 years ago,
right.
This is why you bought it at those prices. So
right. No,
and so gold's above 2,000. I think we're holding about this half square is what we talked about, and we're holding it well above that. And it might consolidate more. I mean, coming down to this 1x2 is perfectly normal and it's perfectly bullish. Everything's cool. We didn't really have a big square out up here. I think we did run 72 and some, but it didn't. It's not looking like we're going into some bear market in gold. That's my take. So
No.
it's more of consolidation up in here before stepping up. It looks very bullish, so we have to call that, right? That's just what it is. Now
right now we're in no man's land though. Right now,
no man's land, because you can drop an ABCD here to the downside,
Yep.
get a target. You can drop an ABCD here, get a target to the upside.
Yep.
And either way, it's in a positive spot for now, about 2006 to be exact. So we'll leave it at that. Is it time to really trade the long side? Well, I think you'd have to just kind of watch your trading system and get the trades off of that, because we are kind of in a place where kind of the counter trend is taking too long for it to be like a strong bull market. But let's see what happens next week. Like, for example, if we can get above 2065, we could be on, we could be ready to move again. So I would use the 60-degree mark as a marker.
It's funny. My monthly half square is about 2060, so that's an important spot to get over.
Yeah. So long as we're above that, it's in good a place. If we can really get above 2065, then I would say it's in a strong place. Ready to move. Let's take a look at the gold. I mean, this is the chart that gives you some confidence about gold, eh? So
it's just consolidating at the highs.
Yeah, I mean, look, we're not talking consolidating down here at 1300,
And these are highs going back to 2020, 2022, it's consolidating at these highs.
I mean, everything shifted after we broke through here, the 1670, 80 area, right?
Yep.
I mean, it's never to look back. Everything's above that. That became the new base. And it's funny, this level was something that we worked with forever. And here was the big test, and here we are.
Yep.
So going into next week, well, we had a high 1 week down. Yeah, sure. Like I said, long as you're above 2000, it's in really good shape. So let it kind of finish up what it's doing for now. There are plenty of other markets that are trending strongly. So gold could be, we got to watch it, right?
Yep.
I would say it's on the watch list for now.
And for those interested in silver, it's similar. It's, basically we're in no man's land, but bullish configuration.
Right. So copper, kind of the same thing. All the metals are sort of taking a breather, I guess, this week. We're holding the trend line we had in place last week, just right there, but we are below the, we were talking about how great it was to hold above 383. And we were trying, but, then we slipped up today. Let's see what happens. It's kind of like natural gas around that square level at the bottom. And we'll look at that in a second. Same kind of idea. We're kind of rotating around 383 is kind of what's happening. So we'll see. I mean, copper's never going to get down to like 250, I don't think, anytime soon.
No.
So we really have to watch where to pick up at good prices up here. And let's watch it for now. It's not as strong. I think above 383 is really when we want to look at long side, because it's going to move a lot smoother.
Sure.
And copper. Oh yeah, that's right. We talked about this. We had matching legs, and that high was kind of resistance. It
gave
was sort
a
of
reaction.
A target. Yeah, and we were looking for some kind of a correction following that, and we got that. So let's let it play out. That's all I can say.
Yeah.
And again, we're above the 90 on a basis weekly. So anywhere up in here it's a good place for copper. I say that because we haven't squared out in a way that would just start a whole nother bear market in copper. We're not doing that. So this is more of a consolidation in a longer term bull market. That's why I kind of term it that way. Yeah, we talked about these highs because I remember this box. And when this came up, I said, well, there's a lot of resistance here. It's going to take a bit to get above that. So to break above that, what it's going to take is for you to spend some time right under it, build up some value and then start pushing it. So we'll see when that happens.
Mm-hmm.
But for now, I don't have a whole lot more for copper. Let's get back. Let's get into the dollar really quick.
And boy, has that been strong.
Yes, the dollar's been good. We came down, almost came down 60 days, which is, it's a decent, we're off by 2 days, but that's okay. Sometimes
That's
we're off
good.
by 2 days and you just,
Yeah.
and the way we fix it is we just move the square. We just say, maybe it was right there.
Right. That's right.
And it's that now is close enough. So I think what we left off last week was we didn't exactly hit 100.5. We got close to it,
Mm-hmm.
on a 60. So that it's not exactly a square out because it's not related, but it's good enough for support. And my big thing was, can we get above this zone here, which is kind of a, it's a structural support resistance zone. And we did, son of a
Yeah,
bitch.
we're sitting on top of it now.
Yeah, I didn't know if it had that in it. So,
Mm-hmm.
and you saw today what happened, right? We just really went up to new highs and we're kind of holding it. So, if you can hold above this zone, roughly, I would say, let's just say 102, if we can hold about 102, I think the dollar's in good shape and that low could be in place as well. And we can expect it to move higher. Of course, 103.50 would be the next thing to get on top of. Up until then, so far, it looks okay.
Mm-hmm.
Now, off that low, we really didn't get a correction. So just keep in mind, it's much safer to go after that correction is finished. But for now, it's bullish from the point of view that, the 150 level held. Anything you want to add?
No, I think that's the good call. We definitely saw a turn here in the dollar.
And also try to keep it simple.
Look at that.
Well, exactly. Right. So
high or low above the 90. That's always good.
Above the 90. So and we talked about that. If you guys go back and track the, last few weeks, I guess. Well, we cover the dollar every week, but if you check it, and we always say, above 100.5, we're expecting the dollar to be in a strong position. Why? Because it can impulse up.
Right.
Short notice, which it did. And now, you can see like we are consolidating here. And it's a little bit like when I talk about gold, but of course, gold is doing the same thing up here. That long as we're above a certain level, like in this case, above the 90, it is, it's in a place where it can run.
Mm-hmm.
You don't want to be on there with huge shorts.
Right.
I mean, not that you can't sell it, but if you do, really keep an eye on the ball, right? And resistance here would be, 106.75 has been our really good level, caught that last run up, but roughly 106, we want to be able to get above that. But in the meantime, that becomes a good target. And the one really up right next is 104, 104.25 would be reasonable, right? Because you can see it tapped it here. So we can meet it there on the way up. And anything you want to add to that?
No, it looks good.
Yeah.
Looks strong.
It's moving okay. Looking at the euro, we are, well, there's a high. We talked about it last week when it came in, and we basically called it to terminate because we were also looking at the dollar in reverse. So now when it sold off, and I think 108 is a level to really test, and if we can get under that, then I think, we could get into new highs for the year.
Yep.
So let's see how that works out, or how long that takes to work out, because it's going to happen. It's just
right.
just a matter of when. Looking at the weekly euro, you see that 110 line, Ben?
Mm-hmm.
The blue line?
Perfect.
Perfect, right? Now we've had that for a while. I think I don't even know how long, maybe all year, a couple of years.
Right.
And if you guys watch it regularly, catch it, you'll remember it. And we had that equal, kind of like what we saw in copper. We had equal moves, and we were calling this to really hold, and we held it. And now this 108 is really the support level. And that's going to tell you a lot. And I'll talk about it as we get closer to it. So 108 is really the key here, even though it looks like price is going back and forth. This is not a support resistant level necessarily. It's more of a like a pivot level or balance level, kind of like we talk about fuse lines. So if it's above it, it is stronger. Obviously, if it's below it, is weaker. With this being support and that being resistance up here, the blue line. And so we're kind of above, obviously, because we were moving towards the highs. So let's see, 108 should be support on any kind of a sell-off. If we get under that, then I think it opens up all the way to 104, and that's a lot of points. So
yeah, it is.
let's pay attention to that.
Mm-hmm.
I don't think I have much to add to euro other than that. Let's take a quick peek at natural gas. And the level
Which is
we always
making a move
make quietly.
quietly. Yep.
This 252, let's just call it 252 level, is the one that we've been watching. We talked about last couple of times, and we talked about how he's rotating around it. And when it came down to we kind of stormed down here, and I was and we both kept saying, well, it's making a low. Let it make this long-term low, because there's going to be some fireworks at some point.
Mm-hmm.
But this long-term low is the thing is you don't want to get ahead of the curve, right? You want to
Right.
wait it to really show the hand before you get in, especially with natural gas.
Mm-hmm.
So let's wait and see. I mean, if you follow the basic 1-2, I mean, here's the 1-2, and we're working the 3 and look strong.
Yep.
And might have more legs. So let's see how it works out. But I think anything above 252, if the momentum's to the upside, I think natural gas is bullish. I wanted to talk about the Dow a little bit, being that, this could be a significant high. And I'm not just saying because of the square, but because even the Dow turned down about the same time. Very in sync,
Mm-hmm.
timing wise, movement wise, measurement wise. So it tells me it could be something bigger setting up. Now, the bigger doesn't mean, we're spinning right into a bear market or crash, but it could be we're spinning into a good sideways
Mm-hmm.
for a bit up in here, right? But
Mm-hmm.
whatever it is, we changed. I guess my point is we changed. Looks like we changed the strong upside thing is done.
Yep.
And with the Dow showing that, all the markets, Nasdaq, everything showing it, I think it's across the board, and a lot of the stocks are showing lower highs already that are leading.
And bonds showed a shift.
Bonds. So it's in the works.
Mm-hmm.
And what else? And this one, what do you think about this, Ben?
What a beautiful thing. Look at that.
I mean, this was like the best trade of the year, because I mean, look, it gave us like 3 weeks advance notice,
Yep.
right? And we were talking about it. It's all there. And of course, it comes right, where are we right now? 46.84. This is real time, you guys. It's 2:00 hour to close, but it's 46.84.
Yep.
And so if we get under that, I think it's a real good sign that, that high is going to be there for a while.
The beautiful thing is this method is completely different from the squares we were doing, the 90 by 45.
Yeah, exactly.
And it's getting you the same timing. And that's when you get that confluence, that gives you the confidence to, to get in there and take a shot.
Yeah, man, because, it's geometry, unrelated ratios, unrelated methods, giving you the same kind of a balance or termination points. You got to take those every time.
Yeah.
It's just kind of a no-brainer.
Yep.
And the Hang Seng, well,
failed at the square.
Failed at the square, but what we need to watch is this ABCD terminating this. The entire leg got finished up right there,
Yeah. Yep.
And so I think it's kind of important. Everybody's talking about the Chinese economy and how that's tied to this and the other thing. So it's worth watching, and we'll see what happens. But for now, it looks like it put in a low, but we really need to get above 1,700 for it to trust anything.
Sure.
That's all I got.
Excellent. Exciting start of the year.
Man, it is. It really is. Let me put it back to you, and let's get on with the commodities and what's happening there.
Sounds good.
All right.
Thanks.
Ben, I bet you could tell us where the resistance is.
Yeah.
Right?
The NQs, the 90 by 45 did the trick. The key thing is already in the correction, we've already taken out this full square.
So that's a new
So
resistance. What is that?
that
15,000?
is 16,790.
Uh-huh.
And as Barry said, all these levels are in the Google Doc spreadsheet, which we'll post a link to. So now, and we haven't, as you can see, we haven't even had an update. We were down, inside, down, 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 down. Um, I mean, the test here looks pretty much imminent, which is 16,180. That looks like the next area. And if we blow through that, it's back down to this full square here.
Yeah, and if we blow through that, we're all going to hear about it.
Yes. So uh the two levels that you should watch, the 16,790 to the
Mhm.
upside on any counter trends. If we get stuck under there, then we can catch that, we talk about there's the one, this would be the counter trend would be two, and then hopefully you catch the fast third. Or if this continues, we want to see if this can hold here, like 16,180. We want to see if
Right.
we want to see if that half square can hold. But it's clear the uptrend is broken. The momentum and the fast move higher is done. That's done. Now it's, what's the next counter trend going to show us that can tell us whether we can catch that fast third or not, or do we just chop around in this half square for a while?
Mhm.
Which wouldn't be bearish, right? Because we'd be above all this, we'd be above all this, above all this. So, but the speed it's come down and come out of here is saying, this next counter trend is probably going to be weak, most likely going to get stuck under here or not even make it there. And then we want to, fire with both barrels to the short side if it does. Anything else you want to add on here? I do have a weekly look and even a monthly, because I want to show you what happened here.
Ah,
Perfect, huh? That's your weekly.
it's a perfect false break is what it is.
Absolutely. False break at a square, and it gave it up basically.
And it all came up without a lot of fanfare, which is exactly how they show up.
Yep. And so this is your weekly. So that level there obviously is key on the weekly, which is uh like call it 16,900. We lost that. So that now this becomes the next operative level here. Can it hold here down at 15,600?
Mhm.
Take a look at the monthly, similar story. Now we've got a full month to go on this bar, so this is early in the month. But if we close under this full square, it's not good. Not good for the bulls. Call it 16,650.
Well, if we
That's
take out I was going to say, if we take out the low of the last month, that's no good either.
that's right. Because then it just gives you the monthly false break.
Yeah.
The reason I'm showing you both of these is it's we're failing at resistance potentially on the bigger time frames, and that's significant. Anything else you want to add here on NQs?
No, you covered it well. That's really the key. Those are the key places to look at, key patterns to look at. We're good.
Mm-hmm.
Good.
And hopefully you people are seeing how a pattern evolves, right? The corner is just the start. We'd spend a lot of time trying to find these corners, because once you can isolate the corner, then you catch the first move in that new direction, then the important first counter trend, and that's where you have the fat pitches that you want to swing at. So that's kind of the process that we go through. Let's take a look at Bitcoin. Bitcoin's doing something interesting here. Um, I mean, if you just go back and look at the pattern, it does a lot of these sort of sideways, you know, everywhere. And now we're here at this new plateau, and we're going sideways again. The question is was this a significant high? Was it a false break? Because we kind of rejected it right away, but we're not moving out of this area. Have you noticed we're just kind of we're going a lot of activity, but going nowhere.
Hmm.
The one thing I did notice on this daily, from this low here in November of 22 to the high, was 120 by 405 right here, which is a good square.
Hmm.
But as long as we, keep doing this sideways above the half square, I wouldn't call it bearish. So we got to let it play out. Got to see how what gives way first. Does this hold here, or do we go up higher, or does this hold here, or do we go lower? And those are your two reference points, and they're both on the spreadsheet. 46,871 up top, 42,375 at the half square here below. And that's your bracket. Any other insight you have on this monster?
Well, we talked about it last week, and basically what that was, coming off of last November low at the high, you were 105 bars out, and that's 360 plus a 45, right?
Right.
So, that's in time, which is the important marker, right? It's a division of the 360, and in price we're up to 25. So if you take it square of 90, we square it out. So that high looks to be squared out, and quietly, and it's funny because it square, the actual line, the actual square, the price level is around 44, let's
Right.
call it that. And we, we got stuck under it for a while. Then we just peaked above just enough to kind of make the tap it, like get above it a little bit and reversed. And so let's see. So for me, if we can settle above 44, like 44,400, right?
Which is
probably
right up in here.
44,444.
Right.
But let's say we can settle above that, then well, let's say 4,500 to make it easy. So if we
Right.
can settle above that, then I think we can go up to 50,000. It really opens up 50,000 at that point. If we don't, this square could, that might be it for the whole leg. And then now we have to take on the other side. So I really feel like next week, well, starting from the high, this is really bearish. So you got to watch your positions here and maybe even get a good short sale if it sets up, right?
Yeah.
So my take is, as long as we're below 44, 444,
Right.
it's in a weak position. Yeah, we ran up hard and we are in a good position now, obviously, right? You're above the 50% of the square. But time did run out. So let's see how he plays out.
I agree. I think we squared out here. I'm
Uh-huh.
just not sure what comes next.
Yeah. So
It's
I would say
still
watch that
unclear.
level, If your half level goes, that's right away. We know what's happening. If we get stuck below that 44,500 level, then we know, it's till we get above that, that strength is not back in to kick it up again, another 10,000, right?
Agreed. So let's see. All right, let's jump into some commodities. We'll start off with one of the grains, which looks good, and that's wheat. Wheat, we've been tracking, this low. Barry called out the low when I was highlighting, saying we might have the low. He said, no, we have the low, and he's been right. We've moved up nicely on the first leg. We just finished an ABCD down yesterday.
Perfect.
And look at the reaction off of that.
Beautiful. Yeah.
Immediately did an outside reversal yesterday, higher high today. This thing looks ready to go. This is a normal correction, right? Normal pullback, ABCD, and now it looks like we've got our next leg started here. So I'm very, very bullish on wheat. Corn and soybeans still have work to do. They look to me like they're setting up to where we're going to get a false break lower and then a reversal. So we be on alert with those for some sort of lower low that doesn't hold and then reverses. I did want to show you the weekly here on wheat. The reason being is, look at this perfect back test of the broken downtrend line at the low this
That's
week.
really good. Yeah.
So we tested that, and then we're closing up, not quite at the highs, but at the higher end of the range for the week. So this again looks like it could be about to make a fast move. And there's the possibility. The next thing, the next big thing we want to do is if we get above this half square at around 652, that's going to give the signal for a fast move. So wheat looks really good to me. What are your thoughts on wheat?
I say hold the course, but we do need to sort of get moving. I'd like to have it close above. See the high 3 weeks back on this chart?
This one.
3 weeks back, 3 weeks, 3 bars back. I'm sorry.
Oh, 3 bars. Okay. Yeah.
Yeah, that's the daily. I forgot.
Yeah.
So right there, that high, I think once we take out that high, we're in good shape.
That would be around 629.
Yeah. Yeah.
So we'll watch it.
We're on the way. Yeah.
I think there's a good chance we'll catch a fast move here in this. I love the way this acted after it hit the ABCD yesterday.
Yeah, exactly.
It really moved up and out, and it closed green today while corn and soybeans were both down. So something's up with wheat. I don't know if we're going to get news or what, but we'll see. Let's go to another one of the commodities in the soft section this time, the softs. And this one is setting up for a short.
Oh boy.
Cocoa, we've talked about. This thing's been a monster, an absolute monster, as you can see. But slowly but surely over the last few months, this thing is running out of steam. And what we've gotten was we completed a huge ABCD that started in May of last year at the high. So we completed this, and as you look, you can see it's not quite a clean 3 drives, but you can see here's one push to a high, here's another push to a high, and here's the third push to a high. And now we've rolled over, and the key thing is we're getting stuck below this full square level. And that to me means the risk reward is pretty compelling. Obviously we got to take out this low here to really get things going. And look where we closed. I mean, we're basically 10 points away, 15 points away. So Sunday night, Monday could be the thing when it really gets this thing going to the downside, because all week I was watching this thing, go up and down, and look at all week how they tried to get above this and come above this full square every single day, and it failed. Here's Monday, here's Tuesday, here's Wednesday. I'm sorry, we weren't open Monday. Tuesday, Wednesday, Thursday, Friday. 4 days banging up against it. To me, it looks like this thing is going to let go. And let me show you the monthly for another reason to be concerned if you are long this right now. Now, it's early in the month. Obviously, this bar is just starting. But December tried, November tried, December tried, and now January.
Fail.
Yeah, that's what it looks like to me. Now, obviously, on a monthly basis, we'd have to take out the previous month's low to really be excited and confident and have high conviction. And that's at 40.98. And with cocoa, that could be 2-3 days worth of price action. So this one to me looks vulnerable. A less risky way to take a position is wait for this low to get taken out. More aggressive is, get in there using, a stop on a close above this full square level. What do you see when you look at this one?
I see that the high squared out. Actually, exactly from that low where you're drawing that trend line.
Yep.
Not only did we have that ABCD, but it's also 120 degrees up by 60 days. That's what we end up being.
Yeah, it's a 72 by 45 at that high.
You had 72 by 45? Yeah, you could have 72. I see. Yep.
On a daily.
Well, I have 120 by 60.
Different scale, probably.
Yeah, different way. We definitely use different scales. But anyway, either way, it's squared out. So
yes, it's squared out. Oh, I'm
And
sorry. I'm sorry. It's not, that's the wrong, I'm looking at it was 120 by 60. I was reading the wrong notes. You're right. 120 by 60 on cocoa
uh-huh. So
is
I
my
think
square.
that's pretty good. It's at least it's good for some kind of a counter trend
Yeah.
down into at least let's say 38.50. It's reasonable.
3,900 would be my target right
That'd be
here
good. Okay.
on the full
3,900. Well,
square.
that's yeah, that's good. And then below
Or,
that
and
I
then
have
below
38.
that's, yeah, it would be, yeah, 37.50, 38.50 in that area. So
All right.
it's an interesting setup.
Mhm.
And it's one you can see the top, it didn't go in with a bang. It's kind of went out with a whimper, where it kept pushing, but you could see just by the size of the bars getting smaller, it was losing interest, losing momentum, and now it's rolling over. So we'll see. We'll see how it plays out. The key thing is where your risk is, where your potential reward is, you know where you're wrong, and that you always have to do that when you're looking at any kind of trade. All right, let's go to the next one. Um, I want to quickly show a couple things on the 30-year. Barry covered it very well, but I want to do a couple things here just to show you. The On the daily, look at where the high was today when they tried to push it. Remember, we were down early, and then they rallied bonds back strongly. Look at where the rally died, right at the full square.
Yep.
So this, as long as we're stuck under this, it's vulnerable. There is some support, not too far below, like around 121, 120 and a half. But if we lose that, I mean, the next major support is around 117 and a half, which is a big move in bonds.
Right, right.
So that's the daily. Let me show you the weekly and the monthly, because there's some things to see there. That's a failure
Mm-hmm.
in the perfect spot, right? Right into resistance, structural resistance, the full square. And of course, we have the reversal this week. That's a failure.
Yep.
Let's look at the monthly. And look at where the high came in. And remember, we were talking about this when we were doing the year ahead sort of monthly reviews. You said normally it's like a 2-month counter trend. Well, this month is holding. If this month holds true, you're going to be right. You had two big up bars here,
Mm-hmm.
and then a reversal. We had two big up bars here. Now we're starting off the month
And
weaker.
now you know why that lower high on the daily is really important.
Yep.
Sort of trap that. Mm-hmm.
So you can see, Barry was talking about bonds. The higher time frames are in support of the fact that the setup is there again to look at shorts, to find a lower high to sell, to find a failed counter trend to sell, because the higher time frames failed at resistance, important resistance. All right, you spent enough time on bonds. Let's jump to the next one, which is another one you covered, but I'm going to cover it, show a few things. Crude oil. The key spot for crude here for me to let us know we're catching that fast move, 73.77. We clear that, we're going to go. And as Barry said, is that, that 10-point move up to 8. For me, it's up to about 85. For you, it's up to about 83 and a half, right? And we're pushing that half square right now. As a matter of fact, it's looking like it's trying to close. We're a few minutes from the close, 20 minutes, and we're just above the half square right now at 73.84. So we got to watch that. Let me show you the weekly on crude as well. Something to see here. What I wanted to show here was the half square here, where we get the all clear from a bigger picture, is around 76.75. We get the close above that, it gives us a higher high from the previous week, and we'll close over the half square. It's not happening this week, but that's a key level to watch for the bigger move. And I said, what if we just do an ABCD? Like what if it's not a wild bull market, but just an ABCD? Almost 100, which would be a nice move from here. So that's crude. Anything else to add on crude? I know you covered it, Barry.
Yeah, we're good. We're good on crude.
Okay. Let's go to the last one. Our old friend, Nat Gas. Now, for me, we saw this was during the holiday week. We got the higher low and we got a reversal. But what looks like's happening here is this fast move is coming into play because we're really threatening to close over this 282 full square level, 282, 283. And that is key. This is the type of thing where Sunday night you could see a gap up. And if we gap up, that means we've cleared the square. We could pull back, sit on top of it, and then go.
Yeah.
This could be the three, right? Because this could be the first leg, the first pullback giving you the higher low, and now this fast leg is potentially coming into play.
I mean, even if that's the one, we're still good.
Yeah, that's right.
Um,
That's right.
'Cause that sets up a whole nother new
But
leg.
look at the changing character in these last few bars, Barry.
Yeah.
After we reversed up and we cleared this little area, boom.
Hmm.
There's aggressive buying taking place on this thing.
These
So
are the places you want to see. All the corners and good places to buy, they all come in quietly. Like nobody's
abs completely quietly, nobody's talking about natural gas. And one of the followers was this guy Goldfound who does a lot of stuff that we do and likes our stuff. He was saying, natural gas is moving up. It's been really quiet. And I said, the quiet movers are the best movers
exactly.
because they end up being your biggest winners. It's nobody's interested. And then when the thing gets going, everybody piles in and you're sitting in your position and you get this sort of action. So nat gas looks really good. The other thing I wanted to show on this is the key level on a weekly. I mean, look at that weekly bar. Opened near the lows, right? Made a little bit lower low after it opened, and then we're going to close on the high. But this level here, this 267, is really key on a weekly basis. You can see what happened when we first got here. We failed, then we kind of chopped back and forth for months at that level. And then once we cleared it, we went all the way up to the full square. Well, it looks like we're going to be able to clear it next week, provided pullbacks hold above 267. It opens up the full square again, which gets us around 368, 367. I think that's realistic. So Natty's back in play, and we know the levels to look for. So watch your levels. See if we get the close over here and clear this. And then when you're looking at a weekly basis, see if we can clear that 360 or 267. And we'll see, we should see higher prices once that happens. On the monthly, we've already made a higher high in January. I mean, it's obviously early in the month, but so far we've already made a higher high on a monthly bar, which again it's showing maybe it's cold weather, maybe it's a winter snap coming. I don't know, but for some reason, they're wanting to aggressively own nat gas at this point. Anything else to add on that one, Barry?
Nope, we're good. I think covered all the important things.
I guess the brief topic I have for you is, everyone always at the beginning of the year is talking about, oh, there's signals from the market when the first day of January does this, or the first 5 days, or the first month, or the first week. What kind of weight do you put on any of that stuff? I mean, how much does the fact that it's the beginning of the year change your analysis or your approach?
Man, I've looked at, there are some systems where you take all of January with a certain time frame, or you take, the price action for the week or the day. It's a little bit like there are techniques in astrology that you can use in expanding out the timeline. Like you would take a tight timeline, let's say a week,
Mm-hmm.
and if you take it times 10, you got 10 weeks, right? Something like
Right.
that to expand it out. And I looked at those in the past, and the problem is, yeah, it can work here and there. It's just not consistent enough.
Right.
Or even the Bradley indicator, sometimes it works, sometimes it doesn't, sometimes it's perfect. And what I realized was, you got to have consistency. Otherwise,
Right. Right.
otherwise I can't work with it. And
Right.
so, yeah, I think those things are fun to research and do and look at, but I just haven't seen something consistent enough where I can actually put the money down and say, okay, I'm going to take this trade.
And that's the important thing, right? Is you want to have the statistics to where you know if I take this trade 10 times, I'm gonna win 7 times or 8.5 times or 6.5 times. Whatever the numbers are, you want to know those things before you go into it.
Absolutely. And the other thing is, if you're trading, I mean, we always talk about trading using some kind of a system, some kind of a method so you can be consistent. Because that's the whole thing in trading. Because we know our mind is not consistent and we know the market's not consistent. Right.
Right.
But we know the patterns can be. So we're trying to, so you build around that. And the whole thing with that, why that's important is without having that consistency, there's no way you can actually add on to your positions or expand your positions or build up your size that you're trading. Like you can't trade 2 units every day and expect to make money trading. You have to build up into that, get the compounding working and everything working in your favor. So, and in order for all of that to work properly, you got to have something consistent to work with. And that's the thing with this sort of outliers. If they're not consistent, you got to check it. Is it really worth adding on to the toolbox? And I went through, actually all my life, I've gone through that. Like, okay, there's something new. Great. Let's take a look. How much can it improve my work?
Right. Does it add to your alpha, so to speak?
And if it doesn't, it might be great. But if it's equal in par or just a little below, it might be
Or if
great.
it's random, which is even worse, if it's just random.
Yeah, I mean, that's the bait, you go,
Right.
it could work this time, it could work this time. But I look at that more like a newbie thing or gambling kind of mentality, right? You can't
Right.
really, it's just not worth doing. But we do have seasonality. I mean, that's a little bit more practical than most things.
And we've talked about that on the show, and I've talked about that on Twitter, which is the natural cycles that come in during the 4 seasons, right? It's good for you to pay attention to that because it is a consistent thing that happens every single year, and there is an effect on the market, right? So you can look at that when those things are coming in. You pay attention. You say, okay, does price action change around this date? If it does, hey, that means the cycle is active and things are going to respond to it. So we have talked about that, and that's a good example.
Yep. So that's all I can think of in terms of, what's in January. I think seasonality is something we can watch to see if it's having any traction. I mean, that's the thing with that. With seasonality, you have to kind of wait to see if you got traction and then get on. But, the thing is, you have other tools that can tell you if the market is trending or not. So why do you need that? So I don't use that. Otherwise, we'd be talking about seasonality on our charts, but we don't. We stick to what we know.
That's right.
And keep it efficient and tight. You want a tight ship. You don't want to be looking at 15 things before you put a trade on.
No. That would be a paralysis by analysis. But
totally. I mean, I want to keep it very, very minimal. And because, your brain is basically the thing that has all the neural circuitry. So I think if you keep it simple enough, whatever simple is for somebody, and you don't get into paralysis, then it's good enough. It's good enough to trade. Like price and time, what we do is just about as simple as you can get. We have 2 units. And then the rest of it's just the mind can put together, structure and trend and all of these things, momentum. But you have to give the mind, allow it space to do that. But if you load it with 15 indicators that we have to line up, you're going to go crazy.
Yeah. Well, I mean, listen, the good news for us and for traders and our followers and our listeners is that 2024 has started off with a bang. And given the outlook and the cycles that we have, it should be a really good and volatile year to be trading.
I agree.
And that is, we're thankful for that. So here's to the first week of 2024 being as volatile as it was, and much more of it, as the year passes and comes through. So the key thing for us is, look at the levels, watch the price action at the levels and then put the odds in your favor based upon those two items with timing thrown in. And when we combine that, it's a very simple system, but when you combine it, you can see how effective it can be. So everybody, happy new year, of course. Please subscribe, ring the bell, like the video, share it with your friends. We're interested in growing the channel this year, so your help in that would be much appreciated. And let's look forward to next week as the story unfolds day by day in the markets.
Sounds good. Thanks, Ben.
All right, Barry, good job, and we'll talk next week, everybody.
All right. Thanks. Bye-bye.
Thanks. Bye.